What is good, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of tickers out there. I'm going to break down why the market sold off the way it did today and some big news involving the Fed and what's going on with all the data coming out for tomorrow that's going to affect Tesla and all these different tickers. But before I do anything like this, before I talk about what the technicals are suggesting and what's going on with the market, let me just mention a couple of things before starting. I am firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks with a $50 cash reward. The offer ends in just 2 weeks, so check it out before they run out. With that out of the way, let's get on with the video. All right, guys, so looking at the market for today, we saw the market attempting to hold up in the very beginning before getting a massive sell-off during the final hours of the trading day. We also saw Tesla follow this trend before this thing continued to sink, breaking below some important support. Now, Tesla was holding in this channel, this downwards channel for the last couple of weeks, and now it finally broke some major support, looking relatively weak. But the real question is, how will Tesla move going forward? Can Tesla try to hold around these levels, or is Tesla about to sink like a rock? But the real question is, if it is going to sink more, what could cause this to sink? And so far, we have a potential catalyst that could slow the market down even more. So one of the reasons why the market sold off is because of the saying that someone always knows something, right? This news did not come out when the market was open. This came out after the market closed. And that is China's Evergrande has sought Chapter 15 protection in bankruptcy court. This is very important news because Evergrande, or Evergrande, however you want to say it, it is the second largest developer in China. Why is this so important? What does this have to do with the stock market? Well, the US companies, US hedge funds are heavily invested into China. They're heavily invested into Chinese bonds, and they use this as collateral when it comes to making other decisions, taking other positions, and they're heavily invested in this. So they're going to lose money when things like this happen, anyways. The US was investing in these bonds. These are the bonds that were basically used by the US for them to take on different positions. When the US invests this hard into China, and we find out news like this that, hey, the second largest developer in China has now filed for bankruptcy, that is horrendous, horrendous news. This is somewhat similar to what happened in 2008 in the USA. Not identical, but similar. And that is not good news whatsoever. So with this coming out, right, whatever happens in China, as China is one of our largest partners in trade, it's going to have a big effect on the US, on the US's economy, our exports and imports, and also the sustainability of our other things out there, from our like currencies to our trade to our other commodities, and the list goes on. So with these big investments being made into China, they're losing and vaporizing that liquidity, that leverage, and this is going to have a very negative effect on many hedge funds out there. This is part of why the market sold off the way it did. Very negative news, and there is more potential for the market to continue selling off as this news is just barely starting to circulate. Now, another factor that could have also affected this would be the current sentiment and even the Fed playing a role from yesterday. We actually saw the Dow tumble like 300 points as the market is falling for the third consecutive day. And then to add on to this, we also ended up seeing the 10-year Treasury yield continuing to climb as we're starting to see the bond traders anticipating higher rates. Now, this is not so good news because what happened was the market was thinking that the Fed would end up announcing some kind of like cut, or like kind of like more easing a policy for 2024 or something like that. I don't think that the Fed got what they want. Not the Fed, I mean the investors got what they wanted by the Fed. So then the Fed being this hawkish led to more selling, right? The market is now inclined to start pricing in potentially a more hawkish Fed. We also have this negative news from China and on more banking fears that have been coming out from like Fitch. So lots of negative catalysts are really shifting this market. To add on to this, the current target rate probability is about 11.5%. I think this still has to be adjusted, but this is starting to go up a little bit as I think the market is going to get ready to price in another possible rate hike for September. Not a guarantee though, because I heard other Fed officials saying that there's a chance that they may just like pause for September, then raise during the next meeting, and just kind of go back and forth between pausing and raising just to give it more time. But not a guarantee, because other Fed officials are saying the opposite, that they want to just keep on raising. So very mixed views, but a lot of the Fed officials are saying that ultimately there will eventually be another rate hike, most likely because of fears of another uptick in inflation. Now, when it comes to all of this negative news, right, inflation going up, possibly the Fed raising rates, this negative news involving China, the market is in total, with all this selling going on and this shift in the overall sentiment, the market is starting to shift to more fearful. We were very greedy before. Now we're pretty much just neutral. We're getting very close to the fearful side. The market is starting to become more scared, more fearful, and that is driving this market more than before. Market momentum is less greedy than before. Looking at the stock price strength is less greedy than before, becoming more fearful. Same thing with the McClellan Volume Summation Index, telling us right over here about the overall positions. We're starting to see more selling. Market is slowing down. The put and call options positioning is becoming more fearful. The market is becoming more fearful. More puts are being bought, and the overall sentiment, looking at the VIX, is becoming more fearful as we're starting to see the VIX holding above its 50-day moving average. So, anyways, all this stuff has been going on. I just want to remind you all that we don't really have any major pieces of data coming out for tomorrow besides some like oil data, but there's nothing too big. I mean, that's the only piece of data coming out. Besides that, it's going to be very light for tomorrow for data. For earnings, it's the same thing. We just have Ross coming out, I think, a little bit later today. And besides that, there's nothing else coming out for like Friday. It's all going to be very, very minor earnings, nothing too big. For Tesla, the price peers ratio is dropping once again. Tesla's losing more and more strength. It's getting weaker as time goes on, and it is set for more downside, in my opinion. Looking at the overall trend right here, you will notice that relative to the market, I forgot this part, it is also weakening. It's weakening just like SPY and the QQQ. It tends to be weak on Fridays. We're only green about 49% of the time, so it's not like that horrible, but it is still not that great. It tends to be, a little bit better during the third hour of the day and also during like the fifth and sixth hours. We tend to see a little bit better price action, but as of recent, Tesla has been very weak during the final 2 hours of the day, and Tesla has continued to see the overall trend just shifting in favor of the bears. The short interest on Tesla is not reportedly going up, though. We don't really have evidence of it like being heavily shorted just yet, and we're going to be watching to see if this gets any new spikes or if anything like that happens. I'm just not seeing the same thing as before, and we're going to be watching for any shifts so far. To add on to this, we have this right over here. Looking at the overall volume, we had 119 million, a little bit above average. So Tesla's selling on high volume, which tends to be a bearish signal. Not good news for Tesla investors. Now, what does concern me is as this news involving China is starting to circulate, we're going to see more fear. This could lead to more selling in the market as the market's selling off in the after hours. But the question is, how will Tesla move from here? All right, so the bullish case, I'm going to go over both the bullish and the bearish cases and talk about what's more probable. If you're bullish, if you want to see the market bounce because of how oversold we are, your only argument is that we're very oversold and Tesla and these stocks are due for a bounce. If you do argue that you want to see Tesla break above 218, if that breaks, you want to see it get above 221. If it could hold above 221, there is hope for 225, but it's looking less likely. If you're bearish, you want to see Tesla just continue to do what it did today, sell off even more, break below 215. If that breaks, we're going to be watching this 212 area. There's some support here, nothing too significant though. The more significant support is going to be between 207.5 to about 210, this entire zone right here. 209 specifically, I think that I was looking at that zone in particular. 209 is going to be very, very important, very close to 210. Watch support around there, and that's where we might see Tesla try to base. But well, like I said before, there are no guarantees. That's just going to be like one price target to watch for where we may see some like buyers step in based off historical trends. So those are your levels to watch for, what seems most likely based off the overall trend. So always be open-minded in a market like this. But with all this negative news, there's a high probability Tesla's going to try to rebound just a tiny bit, retest 218 or so, maybe go a little bit higher, then end up failing again, trading sideways. It could try to get back into this channel, but if anything, it's just going to continue to downtrend. And we could see Tesla hit 215 tomorrow. If that breaks, we could see much lower levels. So there is a risk of more downside. It is looking weak from a technical standpoint. So there's a risk of it coming very close to like this 209, 210 area. But I do want to mention that on the triple Q, there's one thing that could change all this, and that's the fact that the triple Q is at some major, major support. Let me just show you the support. On the 4-hour time frame on the triple Q, it has major support where this yellow line is around this 357 area. The last time we hit this, we saw this thing bounce very nicely within a day. No guarantees this time around, really depends on the news. With the Evergrande news, I'm not too sure if this is going to bounce. If this does bounce, this could help Tesla hold up a lot better, but we're going to be watching to see if this could get above 360. If the triple Q does do that, there's some hope for the bulls. If it fails to do so tomorrow, right, if it breaks below 357, the odds will favor this coming all the way down to 355. That's going to sink the market a lot lower. It's also being dictated by Apple, which is looking relatively weak. So we're going to be watching that very, very carefully. But for now, this from a technical standpoint, this is looking weaker. We are at critical support, so we're going to have to watch and see if this breaks or not. Watch it very carefully to see your confirmation, but just know from a technical standpoint, it is looking relatively weak. Now, to add on to this, looking at SPY, for instance, not looking too great either. We just continue to sell off very hard today. And the after hours, we're actually very close to where we closed, but still quite red. All right, so on SPY, we have this like downwards channel. I'm going to pull up the 30-minute time frame just to show you. And before I do that, actually, just look at the levels. You can see them right here. I actually marked all of them for you so you can see which levels are going to be very significant. But basically, here's how this thing is going to look. Here are some very important levels. For tomorrow on SPY, okay, you're going to be watching this support right here at 435 flat. If 435 breaks, we have like 434.8 as the next support, but it's going to be minor support. It tends to not be that strong. If we break below 434.8, SPY is going to get a big rug pull and come all the way down to 431.5, then potentially 430. That's going to lead to a big drop. Make sure you watch the 434.8 level very carefully. Also 435. If it tries to rebound, there is some hope I could try to get above like 436.5, but the real resistance is going to be around 438. If we get above 438, there's some hope for the bulls. If we fail to do so, then we're most likely going to see more downside later on anyways. So we want to see this thing get back above 438 for there to be hope for the bulls to get back to 440. If we fail to do that tomorrow, we could like try to push up, then reject and come right back down. We're going to likely see the market sink. What seems like the most probable outcome? I went over both the bull and bear cases, by the way, so you're prepared for anything, right? You want to watch 438 if that breaks for the bulls, and then for the bears, 434.8. That's going to be like the bigger victory for the bears if that breaks to take us down to 431.5. But what seems more likely from a technical standpoint, we dropped very hard, so we may get a bounce in the morning, but it may be very, very minor. And if we fail to clear these levels, if we fail to get above like 437 and 438 in all these different areas, we're going to see the market sink, and it looks more probable that it's going to come down. We're just not looking that great, in my opinion. Seems like it's going to try to balance and end up coming down. And if it does break the low we made today, 434.8 is the last hope for the bulls, or else this thing's going to come all the way down to 431.5, if not 430, the entire zone down here. That's going to come if we end up breaking. The odds do favor that, but just to be safe, watch for the level if it breaks or not. And then last but not least, on TradingView, I'm going to talk about Nvidia. This is looking very, very decent so far. It's not really sinking too hard. It is forming this flag right over here, which means we could get a breakout going into next week because of earnings. But until that happens, we should just presume it's just going to go back and forth between support and resistance. And I think it's going to stay in this channel. Now, there's a chance that if it breaks below support around this 430 area, it could sink all the way down to 425. If that fails us, then 420 is on the table. And if it tries to bounce, you're going to be watching this resistance at 436 and potentially 438. So if anything, it's kind of like stuck between support and resistance, going back and forth and back and forth. I would presume it's going to do the same thing again tomorrow. It'll be very boring before we get any sort of bounce, maybe next week. But if it does end up breaking down because of the markets, don't forget about these supports. For now, just assume it's going to stay in this range unless we break one of these levels. Anyways, I'm going to switch over to Webull for the other charts. And before I talk about Tesla one last time at the very end, I just wanted to mention that, hold on, looking at Aapl, it is still not looking that great. Apple's currently at about 173. If this thing continues to tank, you're going to be watching 172.5, 170, then 168 as support. For resistance, you have 174, 175 flat, 176.5, and then 177. What looks more likely for it? I mean, it's very oversold. That's the thing on the bigger time frames, like the daily. It's rarely ever this oversold. So it's in very, very oversold territory, which you could argue makes it due for a bounce. If you're bullish, you want to see it hold above 175. So there's going to be some hope for a bounce. If you're bearish, you want to see it break below the low it made today at 173 to come all the way down to 172.5. And if it breaks that, it's going to turn very bearish. All right. So what seems more probable? Maybe a bounce in the morning, a retest of like 174. 173.5 to about 175 before it comes right back down. And if it breaks this low, if it gets below 173.5, expect this thing to start sinking even lower. And this thing sinking could really hurt the QQQ and SPY. The QQQ in particular, because it's at support and it's just barely holding on. It's holding on for dear life right now. On AMD, same thing as uh, Nvidia, we might see this thing try to bounce to like 106 and reject. If it breaks 104, watch 102.5, then 100 flats, then 98 below that. It looks more likely it's going to get a small bounce and start sinking, looking relatively weak. Netflix as well has a head and shoulders like pattern that's looking relatively weak. We could see this thing retest like 410 before coming right back down. If it breaks below these important supports, if it breaks below 400, watch 393 on Netflix as the next level. It's still looking relatively weak. However, on the NASDAQ, it's also looking relatively weak, continuing to come down, but it's sitting at support. So we're going to be watching, could this thing get a bounce as it's at support right here to retest the 50 EMA? If it gets that bounce, we could see a retest of the 50 EMA eventually over the next few days before it ends up sinking lower. If it continues to sell off, there's a good chance this thing is going to just start dropping even harder, and this could sink the whole market. So we have to watch these levels very carefully just to be safe. There is negative news involving Evergrande that's out there, so we have to be careful. On SPX, we're basically very close to support right here. If we end up getting a small bounce, you're going to be watching for a 4,400 retest. If that ends up failing, you're going to be watching it sink down to about 43.28. There is potential for downside as the trend is looking weaker, so watch it all very carefully. And looking at the VIX, we're going to be watching our 200 EMA. Currently, it's at about 18.4. As this thing starts to push up, you're going to be watching the resistance right about here. If this thing ends up breaking this resistance, there is some potential for it to start pushing to these much higher levels. So I think it's going to test our 200 EMA. We're going to see if it rejects or not. If it manages to break this, this could be because of the market sinking. We're getting very close to resistance. So we're going to be watching this level very carefully. The 200 EMA as resistance, that's going to be a tough one for the VIX. We'll see what happens, especially with all this negative news. You never know, it could still break out of that. One thing that's a little bearish for the markets is the dollar index is continuing to pump and pump and pump. It's sitting at resistance at 103.6. If it breaks this, there is potential for 104. If it manages to break resistance and starts breaking to much higher levels, this is going to lead to more downside for the markets. If it ends up getting rejected and it comes back down below the 200, below 103, this could help the market get a small rebound. As of right now, there's no sign of it at the time I'm recording this, so the odds do favor this continuing to go as the market sinks, but please be prepared for anything just to be safe. For Coinbase, is looking relatively weak. It came down to our imbalance down here. Now we're going to be watching this 71 area. If it does break below our 200 EMA, it's sitting at support. So there's a chance it could try to bounce off the 200. Really depends if it bounces or not. If it holds the 200, there is potential for it to try to range trade between 75 and 80. If it breaks below the 200 EMA, it's going to sink all the way down to the very low 70s, like I just mentioned. That is not looking too good. Google is looking like it's weakening just a little bit in the after hours. We're going to be watching this test of 128.8. If that fails us, you're going to be watching for a retest of 127.7. And if that fails, there's going to be more downside. It's looking a little weaker right now, so we're going to be watching for this retest before a potential bounce, and has a tendency of being very stationary when this happens. For the 10-year Treasury yield, unfortunately, it's looking more bullish. It's continuing to pump as yields are expected to rise, which tends to be bearish for the stock market. This is another bearish signal that's still developing, and so far it's not looking too good for the bulls. For Amazon, it's coming down to very, very critical support. We actually tested previous resistance as support, and now we're approaching 132. 132 is now going to be the 200 EMAs. We're going to be watching this very, very carefully. If Amazon breaks below the 200 EMA, we're going to be watching this imbalance down here at 128.9, very close to 129. That's going to be our next level. So we're going to be watching these things very, very carefully. Please, please, please be very careful when playing Amazon. It does look more bearish to me. Look for a rebound to about 134. If you want to see a trend change, we want to see it get above like 135, then make a higher low. But so far, there's no sign of that. So we're going to be watching a change in market structure. So far, it has not done that. So the odds favor a test of 132. For Meta, it's not looking that great. It continued to sink down very low, but it's very oversold. Going to be watching for 288 and like 290 as resistances. Going to be watching to see if these things end up getting retested. If it gets like a small bounce to like 290, maybe 295, then it gets a rejection, starts sinking lower. If 283 fails us, then we have like 277 as the next level. If that fails us, then we have like 275, 274, those other levels. We're going to be watching them very carefully. Let me just note that Meta is looking weak for now, so the odds do favor like a rebound and a bit of a drop, unless we see a change in market structure, which we haven't seen so far. All right, guys. So with that said, I'm always open-minded because of the fact that the triple Q is at support, but Tesla's continuing to sink in the after hours, and don't forget about some important levels on it. So I'm going to go over these one last time before I end the video. For Tesla, we're approaching 215 as support. If that fails us, there's the 212 area, excuse me. Then we also have like 209 to 210 coming next below that. And then, there is some support in 207. I mean, it's very probable we might see some buyers very close to like this 210 area, but not a guarantee. It all depends on the news and other factors. So far, Tesla's looking weaker, so the odds do favor kind of like a rebound and a drop. But always be open-minded, watch for confirmation, watch it break below 215 for confirmation of this thing actually sinking, and also watch and see if this thing could try to get back above 221. If it does so, there's a chance it's going to hold up. If it fails, it's going to likely sink. The odds do favor Tesla sinking lower, though, looking at the current trend, which is looking more bearish in my opinion. All right, so that's my honest opinion. Thank you all so much for listening. Please have an absolutely spectacular rest of the day. Tesla to the moon, as the long term is still incredibly bright despite these short term bearish fluctuations. And peace out.